Love that interview, by the way, with Cody.
Oh,
You
thank
guys
you. I actually haven't listened to it yet.
you have such good chemistry together, like for that
Yeah,
podcast. It's so well. Okay.
Cody's the
All right.
best.
Okay, cool. All right. So
My camera is.
we are live. All right. And I am so excited about who I have for us today as our guest. We have Veena Jetti, and she's super busy investor, wife, speaker, coach. I mean, her accolades go on and on and on. And the fact that she took the time out to do this with me speaks volumes. And I appreciate you taking the time out of your day to do this. I really,
Of
really do.
course. Thank you for having me.
Now, what I'd like to do during the first few minutes is just ask you a few questions just to give our viewers and our audience a little bit of time to get to know you more on the personal side. And that also gives people time for the algorithm to kick in because we just went live, and I want people to have viewers who start to get the alerts on their and the pings on their phones to be able to get on there. So we got a few questions that we're going to go over just to get to know you a little bit better. And if you see me typing, it's just me taking notes. All right.
I love it.
I don't want anybody thinking that I'm not paying attention. All right, cool. So, Veena, what are 1 to 3 books that you have given out as gifts, or 1 to 3 books that you're currently reading that impact your business or your personal life right now?
Okay, this is a really well-timed question because I don't know if you know this, but I have a Facebook community where, I hang out and I like help people learn about multifamily, whatever. And one of like the contests I just ran, because I'm always trying to think of like interesting and new ways for people to be rewarded for participating in the community. And so I ran this like contest, and the prize was actually 3 business books that I highly recommend. So the winner, I emailed 3 ebooks to them of books that I think are really great for everybody to read in business. One is Rocket Fuel. The other is Traction. And the third is a book called Vivid Vision. And those 3 books were actually given to me by my mentor, or one of my mentors, who runs like super successful businesses. They cash flow multiple 8 figures a year. So highly successful individual that sent me these 3 books just out of the blue and was like, hey, I think you need this to kind of help grow your business. He sent them to me like a year or 2 ago. And so I recommend those to other people who are looking to scale their business.
Got it. Rocket Fuel.
Yep.
Traction.
Yep. And so I even refer back to them often. Cool. So it's like literally sitting right next to me in my office.
Awesome. Okay. All right. Next question. What purchase of $100 or less has impacted your business or personal life, or something that you use every day?
Oh gosh, this is such a hard question because a lot of times I actually don't know how much like things necessarily cost, because I want to say I recently signed up for, it's actually going to be a software. So I recently signed up for Zapier, which people have been talking about this for years, right? Like this is not a new secret. I just really procrastinated on getting it done. But I don't know. I think it could be like a $250 purchase. Is that okay? Is that
right? How many zaps you do, right? Because if for a brand new person who's just getting started, if they only need like a couple hundred zaps, they can do it for like $50.
I love that because I did 2. I've done 2 so far, and I have no idea how else to use it because I know it's like very functional and everyone raves about it. And all the people I know use Zapier like their Bible, right? It's what they refer to. They go back there. Every process gets set up there. I just signed up for it like 2 weeks ago. So I don't know how to use it yet, but I have 2 zaps that seem to be successful so far.
Yeah, I love Zapier. I say Zapier.
Oh, is it Zapier?
I don't know. I may be pronouncing it wrong. That might be the Latino side of me with the I.
Okay. I mean, I could definitely be wrong too, because I just signed up for it 2 weeks ago. So what do I know?
Yeah, I love it. I love it. It works. It works quite amazing. Oh, so what is an apparent? Sometimes people don't like me using the word failure, but you a mistake, a mishap, a failure, or something that happened to you in business that you were able to turn around and turn it into a learning lesson that now impacts your business today.
Well, I mean, every failure we use as an opportunity to learn and do better. So all of them have lessons in them. I think probably one of the most expensive mistakes that I've made. So I would say if I could go back and redo everything, the one thing that I would do religiously, and I do religiously now, is we document everything, especially when it comes to like partnerships, right? So if you've been in business long enough, you know that partnerships always come to an end, right? And that actually is something I stole from my husband, who's not even in business at all. He's a physician, so he's like in medicine, so nothing related to what I do. And he goes, babe, you got to think about it like this. All partnerships come to an end. And I was like, that is so negative. Why would you even say that? He's like, no, because think about it. Either you guys end amicably because you both want to retire, or one person wants to retire, or someone wants to move on to something different, or people grow and change. He's like, so the only thing you have to really think about is that this partnership is probably going to end, whether it's now or 10 years or 100 years from now. You don't necessarily know, but all partnerships come to an end. And I was like, wow, this like light bulb moment, right? And this was something he said to me like very recently. It wasn't something he said to me like 10 years ago. He said this to me in the last like year. And then I heard from one of my attorneys that I work with. His name's Bill Richmond, phenomenal guy based here out of Dallas. And I actually invited him to do a session at a mastermind about negotiating contracts because he's a litigator. So the contract side prevents litigation, right? And if you do that right, hopefully you don't have to know Bill Richmond. But if you have issues that come up, you might need a litigator. So sure. He still wants you to prevent litigation because it's better for you. It's the right thing for you as his client. And so one thing he said to me, because I said, hey, these are awkward conversations to bring up with partners that are excited to work with each other, right? Like when you first start a partnership, it's like when you're first dating and you're like in the honeymoon phase, right? Like everything is great and rainbows. So it's really awkward to like start planning the divorce. And here is the most impressive thing he said to me. Are you ready? I'm like very excited to share this. Okay. He goes, sit down with your partner. First, blame your attorneys. Always blame your attorneys. There's a hashtag in my group called Blame Nick, who's my securities attorney. I always blame him for everything, right? Can we do this? No, I'm sorry. Our securities attorney, he's so annoying. He won't let us do it, right? So always blame your attorneys or your CPAs. You can blame either one. But you say, hey, I was talking to our attorney and I was telling him about how excited I am for our partnership. And, she's on board with it. But they want us to come up with clarity around the evolution of our partnership, right? The evolution of our partnership. And then you talk about it as we grow and make a whole bunch of money together and we're super successful and we change the world and we do all these great things, our partnership is going to need to evolve. So what happens if Veena comes to you and says like, hey, I need to take a step back because I need to do something with the family, or I have this emergency, or I just don't want to, right? Like whatever that is, what does that look like? What does that evolution look like for us? And then it opens the door to start talking about buy-sell agreements. It opens the door to how you can amicably or peacefully separate, even if there's a disagreement in thought or ideas. So that for me is like life-changing business advice. I like knew about it when I first started. I didn't actually know about it and do anything about it until like now where I religiously do this.
So we're talking almost like a prenup for business. Yeah.
Yeah.
And then so when we're going into business partnerships for people, or even on projects, right? Or JVs. I know that you were talking a lot about JVs. Would you say that it's important to have an exit strategy on that JV for every deal that you do?
I think anytime there's a partnership involved, you should definitely be giving or having this conversation, be giving them formal documents or getting formal documents or executing them together. I think that's absolutely important in any business relationship. Because here's the thing about contracts, right? Like I'm somebody that likes to do business just with like a handshake, right? Like that's how I operate because I like to think that like my word is bond. And I'm sure everybody pretty much will say that to you, right? No one's like, oh, no, I'm going to totally screw you once we shake on this, right? But here's the thing. When things go wrong and you need those documents, they don't matter until you need them. And when you need them, they don't just matter a little bit. They matter a lot. And so it's really important that you think about those and you plan those things when things are still nice, while you still like each other. Because once you start having disagreements, things spiral very quickly. And the unfortunate part is while you might be fairly reasonable and be like, okay, look, I see what you're upset about. Let's go down all these different paths to resolve it. Ultimately, if the other person is not reasonable or kind of like has whatever external pressure or forces, then they can be completely irrational in how they respond and how they react. And they, when trust goes, it starts becoming, oh, no, but you did this and you said this and you meant to do this and you're lying to me now and you're not telling me the truth. And it becomes this almost burden, right? Where you're trying to manage your business day to day and keep your business going, but then also dealing with the weight of having to like deal with these onerous requests sometimes. So it's always better to just like have it all written out and predetermined ahead of time.
Yeah. High level advice, you guys. High level advice. Yeah. Really.
Yeah.
Okay. If you had a massive, and not that you need one, but if you had a massive billboard, right?
Yeah.
What would it say on that billboard?
Oh gosh.
Maybe you do.
I don't have a billboard. Not one that I know of anyway. What would it say? I think, okay, so there's like a quote that I really like that I kind of follow often. And I feel like I say it 100 times a day. And I don't know what, it's like a proverb, but it's like the best time to plant a tree was 20 years ago. The second best time is today. And I just love that quote because sometimes we get into these like points in our life, these seasons of our life where we think that this is the maximum and this is what I'm just meant to do, or this is my situation, almost like acceptance of where you are. But I think it's important to remember that like you can always start making different choices today. You don't have to make the same choice every day. And if it wasn't going to be that, it would probably be something about like invest like a woman or something, invest like a girl or something like that.
I like that.
So
I'm going to make a t-shirt out of that.
I love it.
All right. So I think that's a good segue into my next question.
Mm-hmm.
Say to someone that wants to get involved in investing and at any age, they want to get involved and they don't know where to start. What advice would you give them?
Yeah, it's definitely overwhelming. You'll probably hear a bunch of words that you don't know, even if you're in the single family space or an adjacent space, right? Like you're going to hear words like NOI and cap rates and dispositions. And I mean, one of my good friends, he's like huge in single family and creative finance, right? And he always teases me. He's like, why do you guys in multifamily, you're like so elitist and so fancy. You guys like make up words like T12. Why can't we just say a P&L or a profit and loss? Like, I'm like, well, we can, but I don't know. We just call it something different, right? And so he's like, you guys always make up all these words. It's like learning a whole new language, even though we already know what these words mean. I'm like, I don't know. I didn't do this. This is just how it is. So I would say, don't get overwhelmed. Don't fall into analysis paralysis. It's very common. But be around people that share the same goals and visions as you, because what happens in multifamily especially is like, this is not a Veena does everything and is successful doing everything. No, this is a team sport. This is collaborative, right? So I have partners that I work with. They help alleviate some of the pressure that I have on me because I can't do everything at 110%. It would be a disservice to our investors to do that. So what we need to do is we need to actually divide and conquer, right? So the things that I'm really good at, I do those things and I focus on those things. Even in my company, I'm really big on making sure that I'm playing to someone's strengths. Like a lot of people are like, oh, what are your biggest weaknesses? How can we develop those? I don't care if those are your weaknesses. Leave them to the side. If your weakness is scheduling, great. I am never, ever, ever going to ask you to schedule because all I'm doing is creating a problem that I have to solve over and over. If your strength is organization, great. How can I make you the best organizer that has ever lived and walked on the planet, right? Like, so I always look for the strengths in people and partners and employees, and I play to their strengths. And the things that are their weakness, either we find someone else to fill that role or we outsource it. There's no reason for you to do something that you're going to be miserable at.
Right. It's that whole right person on the bus.
Yes. Yeah. Yes.
Okay. Phenomenal answer. All right. This will be the last one. What is an unusual habit or absurd thing that you love that like the average person wouldn't?
Oh, okay. This is a hard question. What is something absurd that I love?
Yeah.
Oh,
it could be a gym rat, the particular food you eat every day, or something like anything anything that hasn't may not have already been shared in other.
Oh, you want something like unique? Okay, I really love like puzzles and games, and I'm
Cool.
like prepared to lose every single friend and family member over a game. Like, no joke.
Like Words with Friends or something like that, or like
All of them. Yes,
yeah.
all of them. So, but like even at home, we'll play like board games sometimes. Like people, it's hard for me to convince people to play with me after they played with me 1 or 2 times because I'm so intense. So what we actually started doing is playing those games where it's like everybody wins together. So we all have to work together. I'm like, no, this is just a way to avoid having a loser, which is not going to be me.
So I wouldn't know what it would be like to play Monopoly against you. It'd be like just way.
Yeah, I'm like, I love, well, so there's a different version of Monopoly called Monopoly Deal. Have you played it?
No.
Okay, it's
Monopoly.
incredible. It's like the best game ever. It's like a card game version of Monopoly, and it's fast. That's like, because Monopoly takes like 3 hours sometimes. This you can play in like 15 minutes or so. And we take it like when we go to, there's a group of us friends that speak at a lot of the same real estate conferences, and we'll take that game there and we'll all play with each other. And we're all real estate people, so it gets like very intense. And then we'll like do things like be like, okay, you have a 30-second time limit, no thinking about this because you're taking too, like, it's cutthroat. But yeah, no, I think people don't realize how much I just like love. Oh, and I love trivia too. I love like bar trivia.
Yeah.
Or just trivia in general, like Jeopardy, Wheel of Fortune. I'm the best at Wheel of Fortune. Everyone in my house hates it. They hate how, I don't know why. That's like one that I'm actually very good at.
Cool. All right. So, audience, if and please give me a quick thumbs up or a comment that you can hear me okay and you can hear Veena okay. That would be fantastic. We're going to dive now. We're going to deep dive into this. So, Veena is the founder of Vive Funding. Okay. And right now, personally, you have almost $1 billion in assets, if I'm not mistaken.
Well, we sold a bunch last year, so we are down in AUM, but we've transacted on a little over 900 million.
That's amazing. And I was going through all the projects that you have. I mean, I'm seeing overfunded. Is that right?
Yeah. We have project. Once they overfund, we don't accept more funding. So
Right. Okay. So that's really like high level stuff. And so for the people that are just looking at this for the first time, maybe we can give them some type of an origin story and just kind of like tell them how you got into multifamily and maybe what your first multifamily deal was like, and then transition to one of the bigger deals that you did. I heard on Cody's thing you did that the was it 42 million dollar one in North Carolina? That was just recently.
Well, so we did 2 in North Carolina last year. Combined value was like 145 million, give or take. Maybe a little bit more, 150 million. Let's call it 150 even. That was last year. We did both of those projects. And so where I started really is I started in the single family space. I didn't know you could go straight to multifamily. If I knew then what I know now, I never would have bought a single family home ever. I would have just gone straight to multifamily. The first multifamily deal that I did, and the reason I switched from single family to multifamily is because there was a week where I bought like 5 houses and I was like, oh, this is not sustainable at all, nor is it scalable. And I basically hate everything about this. And so I knew there had to be a better way. So I ultimately started multifamily. Like I said earlier, this is a team sport. It's a collaborative sport. So I actually had a partner who was he had just started doing some multifamily stuff. And so I partnered with him and we bought an asset for almost just under 16 million. It was 15.9 million. And then we sold it 3.5 years later, 3 years and 3 months later, at 24 million. And that was like the first deal that I had ever done in multifamily. And I mean, well, the problem with multifamily is it's like, it was 196, 98 or 200. It was between 196 and 200.
Okay. So for looking at this for the very first time and they're saying, I want to transition into multifamily. and by the way, we'll go into the opportunity for them to even invest as accredited investors with you. We'll talk about that a little bit later on, because that's a way for them to do that. But say for the investor that wants to be mentored and they're saying, okay, so how the hell do I go from one house to like 196, 200 units? Like that was a big leap. I mean, even going from 6 was a big transition. And so that like almost immediate, or walk me through that jump.
Gosh, I'm trying to think. And there were several months in between the week where I was like, okay, this doesn't work, and the time we actually did that. Maybe it was like 6 months or 8 months. Multifamily is a very slow game. It's not, everyone thinks it's like sexy and glamorous, and it is in a lot of ways, because, it's large. You can make a lot of money. There's massive scale to it, right? The economies of scale. But it's slow. You can flip one house every month, or 2 houses every month, or 3 houses every month. And that's not unusual or unreasonable. It is very difficult to buy at that same clip when you're looking at assets that are as large as the assets that we look at. So, I mean, it's definitely a mindset shift. I think that's the first thing and the biggest piece, that people cannot get into multifamily because they can't get their mind wrapped around it.
Right.
But once you can overcome that, oh, sorry, go ahead.
Were there agents involved in that deal? In other words,
like brokers?
Just off market, brokers, real estate brokers. And did you and your partner seek representation, or did you just go directly to the agent and you said, "Hey, we're interested in this opportunity"?
Yeah. So the way multifamily works, especially large multifamily, there is usually not a buyer's agent on a deal. There's usually only one broker, and they don't co-broker. Now, that depends on the market cycle and the circumstances of every deal. But generally speaking, your seller is going to be the one with agency, not your buyer. So on that, the seller had a broker that listed the deal that we went underwrote, and we bid on it. And it's funny because, like, I remember I was just saying about, like, oh, we have like fancy words in multifamily. Like, we would never say an agent, right? Because that is very much a single family term. But in the multifamily world, we just say broker. But in single family, broker means something different than a realtor, right? And so in the multifamily world, they're just all brokers for us, or, investment sales is another word that they use. But anyway,
Even
so
we have a broker's license.
Yeah.
They may only have an agent's license. But anyway, I don't.
I don't actually know. I don't know anything about that. I've never had any kind of license like that, so I have no idea what the rules are. You would know better than I would.
Right. There's agents, so they still have their agent's license. Now, some of them do have broker's licenses.
Okay.
But they're still agents. But yes, most commercial agents would call themselves commercial brokers, even though they're really only licensed agents. Anyway, that's just a nuance. Nothing.
Okay. Yeah. I mean, I don't know. That's totally something that I will not claim to know anything about. I just know we call them brokers.
Okay, so brokers are involved.
Yeah, they are. Usually they are. I mean, the reality is there's so many moving pieces on multifamily assets. You want a really good broker involved. Like, even if I was selling an asset to a friend, right? Like, if I'm like, okay, hey, friend, you want to buy this asset for me? Great. We agreed on pricing, whatever. My next step would be like, hey, I'm going to bring this broker in to help us handle the transaction, because there are certain things that brokers can say. They act as a buffer between buyer and seller, right? And if you're in this for the long game, there's a really good chance that I'm going to buy from you again, or I'm going to sell to you in the future. And I want you to still like me when I tell you, like, oh, well, you lied about this, or you didn't tell me about that, or whatever it is. And so having a broker in the middle can really help mitigate some of the ethos of the deal. Having a good broker. Having a bad broker is just terrible in many ways. But having a good broker, they're worth their weight in gold.
Right. Okay. So I'm trying to just make this as I'm dumbing it down just a little bit for the people who are looking at this and they're like, I want to get in, and I need to get over that mindset hump. So brokers involved, we found it on the market. You had a partner, $16 million. So for somebody that's looking at this, that sounds like a daunting figure.
Yeah.
The investor, maybe not so much, but for someone who's saying, hey, I want to do things at a high level. How do I get, and you are the queen of raising money. So how does someone get to that that level, you had a partner. Did your partner have the funds to purchase that one, or did you guys put
No.
your money together, raising immediately?
We started raising immediately. My partner had some of the funds for it. I had to get another $1.2 million. And I cried myself to sleep every night for like 6 weeks because it was so hard. It was so hard to raise that money. Oh my gosh. I like have PTSD just thinking about how difficult that time was. But I was prepared to sell everything I had to get that $1.2 million. I didn't care if I was liquidating every 401k, every, stock portfolio that we had, selling our cars, or I was going to get that 1.2 million. That's all I knew. And I was also going to cry myself to sleep just because it was so daunting. But here's the thing. The first raise is always the hardest. After that, it gets exponentially. I always say it gets exponentially easier, but that's not true. You get exponentially better every time. It's still hard to raise $1 million. You're just better at it, so you can go out and do it, right? Like once you've done it so many times, it's easier and easier for you to execute on. Right. And it's like, that thing when people are like, oh, making the first $1 million is the hardest, and then making the second million is easier, and making the third million is that much easier. And I'm like, I'm such a dummy because I used to think that meant like, yeah, obviously once you have $1 million, you can invest $1 million and make $2 million. That's so much easier to do than when you're starting from zero. So this is like a dumb quote. But then I had like a light bulb moment where I was like, oh, wait, I get it. Once you know how to make $1 million, you can do it over and over again, and you can scale and you can apply it to other businesses, and you can start new opportunities, and you can take more risks on that you couldn't take when you were in the $0 to $1 million range. And so for me, that was like life-changing to really realize it that way, because that's the same way with raising capital, right? Like the first million is really, really hard because you just don't know what you don't know yet. And then it gets easier because you have better tools and you can invest into better knowledge and technology and systems and processes. So the second million is easier. And then from there, it just scales up and it goes exponentially. It's not a linear growth.
Now, do you offer like coaching or mentorships to teach people how to do this within your organization?
This is a very interesting question because I started my Facebook community. It's a free Facebook community because it's really important to me that this information is accessible to everybody and anybody. Yep. And in starting that, what I found was a lot of people will join and then not actually take action. And what I was doing was I was putting out these Zoom calls, and then people would join and listen and they get excited, and then they wouldn't do anything with it. And I was like, okay, we need to like start figuring out how to like weed out people that are just taking up a seat, because I only have 100 seats available on my Zooms, and it's first come, first serve. And it's still like that. But what I started doing was I started dropping them into a vault, which I call Veena's Vault. And so Veena's Vault has all of the videos and recordings, and like I put in like free resources and handouts and worksheets and stuff like that. And it's actually really affordable. It's it's like $99 a month. It's nothing crazy. So it's not like $100,000 mentorship or something. But in doing that, I have so many people consistently asking me now if I would consider starting like a mastermind or a mentorship of some sort. And I don't do anything unless I can do it at like 110%. And quite frankly, like, I don't really know what that looks like. And, one day I'm sure I'm going to listen back on this podcast and be like, oh, Veena, this is like your first raise where you had no idea what you were doing. But so I'm considering it. I'm seriously contemplating whether or not I should put something out there. I think one of the things that is really important to me is I keep hearing, like, especially from women and minorities, like, oh my gosh, there's nobody in this space that does what you do. I want to learn from you. And I want to share it. I mean, I'm at the impact phase of my life now. And so I'm really excited to share all of this knowledge that I poured a lot of blood, sweat, and tears into to get. So I'm excited to share that now, but I don't have anything official yet, but maybe one day we'll see.
Got it. Cool. All right. So Veena's Vault, right? We're going to turn that into a hashtag. Veena's Vault. And before I even started the podcast and the video with Veena, I asked her this morning. I got her blessing. We have Uncle G, right? We got Grant Cardone as Uncle G, but now I am officially TV and TV. Okay, so if we could make that a hashtag and TV, we now have our auntie us and mentoring us through this process.
But we just have to point out that I'm much younger than Uncle G.
Like I said earlier, you could be an auntie at 20 years old. I mean, or 25 years old. So you're our young Auntie V, and we're gonna see if we can rival Uncle G.
I love it.
That's my goal. So Auntie V is the hashtag. Okay. Amazing. All right. So let's talk about OPM then. I know that you talked a lot about that. That I heard you on, and raising money. What is required? How do you keep yourself out of hot water? What was the phrase that you use? It was the forgive me. There was a certain phrase, broker dealer violation, right? And avoiding
dealer
that.
violation.
So walk me through that.
Yeah. So your first call, anytime you're doing anything, before you even talk to anybody about the deal, before you even have a deal on the table, is to your securities attorney. We use Polymath Legal out of LA. It's Nick McGrew is the name of the attorney. He's awesome securities attorney. I have been working with him for like 13 years, 12 years, 13 years, a long time, over a decade. And he's incredible at what he does, and what I love is all of his systems are now automated, so you can, as long as you turn the information around, you can actually get your documents back really quickly. Lead time issue.
Sure.
If you're listening, write this down, because it is always a lead time issue when you are raising capital to get your legal documents. So you want to start that process as soon as possible. Do not wait even one day. There's no point in delaying by a day, because you will need all the time that you can get to raise that capital. So my first call is to Nick. And I'll call him and I'll say, hey, Nick, we have this deal. It looks like we're going to get awarded the LOI. We need to raise whatever, 20 million, 10 million, $1 million, $500,000, whatever that number is. It doesn't matter. If you're raising any capital from other people, you need to talk to a securities attorney, even if it's $100,000. And so I'll call him and I'll say, like, what are the most recent rules, any changes I need to be aware of? And he'll advise you on which exemption you can rely on and file with the SEC, and he'll get all your paperwork together. Now the broker dealer violation that you were asking about, and I'm not an attorney, so this is just for educational purposes, right? But what the broker dealer violation says is you cannot give somebody who is not a broker dealer, which is a license, you cannot give somebody transaction-based compensation. So what that means is I can't come to you and say, hey, Paul, if you raise $1 million, I'll give you 10%. If you raise 2 million, I'll give you 20% of the deal. Because now that's based on the transaction. I can't say I'll give you 10,000 for every million you bring me. I can't say, hey, if you bring me $1 million, I'll give you 10%. But if you don't, then I'm going to take that away from you. So it cannot be based on the success of the transaction. Because if you do that, then that is a likely violation that could be a big issue for you.
Okay. So I heard you say something important. Do you need the deal first before you start to raise, or can you raise first and then go look?
Yeah. So I always like to say, this is kind of part of my secret sauce, right? Like, I am raising money in between my deals. Once I have a deal on the table, there's not enough time for me to go out and create those relationships or strengthen those relationships or speak to every investor that I need to speak to. So I need to have a investor who's already ready to write the check, just is waiting for the next opportunity or the right opportunity to do so. So what we do is I'll talk to an investor when I don't have a deal, and I'll say, hey, listen, this is who I am. This is what our company looks like. This is what we generally target. This is the general structure of our deals. and we rinse and repeat our deals usually. Like we don't really change the structure from deal to deal. And then I say, hey, when I have a deal, here's the process of what's going to happen. I'm going to send you the deal. I'm going to put out a webinar. If you like it, you can go ahead and soft commit. You can start the commitment right then and there. If you have more questions, reach out to us. We'll answer those, right? So like I go through this whole process and set them up for the timeline of what to expect. And then I tell them too, because our deals, like you said, they get overfunded. So if you want a spot, you need to commit to it quickly, because otherwise it'll get overfunded. There's nothing I can do once we're funded. Even if my dad has asked me before, and he's like, hey, can I get into this deal? I'm like, no, I'm overfunded, Dad. I don't know what to tell you. And it was actually, he was trying to increase his investment. But the point is, even my own parents, I can't accommodate their increase requests because I'm funded. So that's what you need to kind of think of what the process and system is, and then convey that to investors. Then when you have a deal, it's much easier to start raising that capital quickly, because all they're vetting is the deal at this point.
So, okay. For the average person though, now look, you've got documentation. Documentation will always be conversation.
Mm-hmm.
Track record, this track history now of the projects, and you've a track record of success that you can point to.
Mm-hmm.
For someone that doesn't have that, what is the best way for them to be able to do that? And how do they reach out to investors? And again, this is for the people that are
just starting.
I don't want them comparing their to your chapter 10. So
no, don't do that. Don't do that. You will never get started if you do that with anybody, not just me. So chapter 1, this is what it is. You need your team, right? And you need to have a team where you can rely on their experience and their track record until you have your own. And then you're going to talk in terms of your team. And I still do that to this day. I never really talk about like, oh, I've done this, right? I always say, we have blah, 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 blah. Our team XYZ. And that's just the mentality I have. That's why I do that. It doesn't mean it's right or wrong. But when you first start out, you're going to have your property manager. You might have a few JV partners. You're going to have, I know a lot of investors to do this, which I think is a great idea, is establishing a board of advisors where maybe you give them a small LP or GP position, and then you put them on a board of advisors and you say, hey.
So we're using acronyms that people might not understand. LP, GP.
Yeah. Limited partner and general partner. So maybe you put them on the active side or the passive side of the deal just to advise you, right? And in exchange for that advisement, they're going to get a position or compensation in the deal. But your first few deals, do not be so worried about how much money you're making, how much you're getting from the general partnership or GP slice. Don't worry about that, because for you, you're just trying to get your foot in the door and build the track record. Once you do that, you can go out and you can command whole entire deals on your own if you want. But that first deal, you need this. So you may be giving up a lot of the pie, which don't think of it like that. What you're really doing is you're taking a small slice of a much larger pie. You just don't know the rest of the pie is there yet.
Right. And you're in essence paying really is what you're doing. So
and making money along the way, hopefully.
Along the way. All right. So members of your team, you need the securities attorney, or the fund attorney, property management, JV partners. Okay, so let's talk about JV partners. And again, forgive me for doing this, but I want to go into the acronyms because sometimes people are just like, JV, joint venture partners. Describe your joint venture partners. Are you always looking for more joint venture partners? Who should someone be looking out for as a joint venture partner if they're just getting started?
Yeah, so I have one joint venture partner that I work with, and her company is also A to Z operational, the same way ours is. And we have just done so many deals together now. It's just a partnership that works really well. But we both like controlling our own companies, so that's why we haven't merged yet. And never say never. There could be a point in the future where we do merge or one of us acquires the other. I don't know. But for right now, what I like about this setup is it allows us to operate independently. We choose to do deals together over and over and over because we work really well together. We've done like $400 or $500 million together, maybe a little bit more. I actually don't even know, but we've done a lot of deals together, and we've done really well for our investors together. And we've navigated issues and problems together. And we just, when things aren't going well, we really shine as a partnership and as a team. And so that's what you want to look for in a JV partner, is somebody who understands the semantics of the deal, right? Like the ethos of what happens in the deal. And so, and this is where I go back to, like, you want everything papered up. Like, even as much as I love her, I adore her. And we've done so many deals together. Like, we don't even have to revisit paperwork every time we do a deal, because we do the same thing every single time. That's our strength, right? Is rinse and repeat. But with that, we still have everything documented and papered, because things change, right? All partnerships eventually come to an end. And I don't know what'll be the cause of that or when that'll be, but it'll come to an end. But I think ultimately we have a lot of respect for each other. I was actually talking to her about this yesterday, so it's kind of crazy timing we're talking about this today. Because I was telling her, I was like, hey, I was talking to someone who asked me this exact same question, right? Like, how do we know, or what do we look for to find a JV partner like what you guys have? And so I asked her, I said, Ellie, what's the answer to that question? Because, like, I don't actually know that I know. She was like, I can't put it into words. It's very difficult to verbalize why we make such a good team, or how we make such a good team. And so we tried, and what we kind of came up with was, one, we both work as hard as possible, because neither of us wants to be the anchor in a deal, right? Like, I swear that lady has like 50 hours in a day. And I'm like, how are you doing this? You're like a mom, a wife, you run this crazy successful company. You do everything. Like, I'm trying to keep up with you right now, right? Like, so that's one. And I think she would say the same thing, vice versa. Two, we don't limit ourselves, right? Like, so we throw out crazy ideas all the time, back and forth, and she'll suggest something.
A real estate company too? Is hers like a fund?
Yes,
as well?
yeah, well, multifamily. But we do other business ventures together, right? Like, we invest in other things together personally, not with our investors at our companies, but personally. But we throw out crazy ideas. We talk about strategy all the time. And there's like no stupid idea when it comes to strategy, because we bounce off of each other, right? I'll be like, okay, well, what if we did this instead? And she'll say like, oh, that's a great idea, but I think ABC. And I'll be like, oh yeah, but if we do XYZ, it works, because our strengths complement each other. Her strengths are my weaknesses, and my strengths are her weaknesses. And so we make a really good fit in that way, because I like doing the things she doesn't like to do, and vice versa. But I think the third and most important one that we came up with, and we both like vehemently agreed to this, is that both of us want to see each other win at all costs. And what happens when you partner with people like that is you stop limiting the possibilities of what you can do together, and you start seeing this whole new world of things that opens up. And for me, like, I always tell her, I'm like, Ellie, we don't have the same goals and the same dreams, right? Like, we're just different people, and that's okay. Like, hers are not less or more valid than mine, and vice versa. They're just different. We're different people. And like, she wants to have a $10 billion company, and I have zero doubt in my mind that she will do that, and very soon. I'm like, okay, listen, Ellie, I'm going to help you get there, and I'm going to do what I need to do to help you. Just pick me up in your private plane every now and then. It's like, just don't forget, like that. But that's how we help each other win, and we support each other, and we don't fight. We don't nitpick over the little things. We're just always looking for ways to like make each other better. And that really is game changing when you have a partner. And it's hard for people to do that, because ego gets in the way, especially in these types of transactions. But she's
on JV partners on every deal, right?
For the last like 3 years or so, 3.5 years. Yeah.
Okay. So for somebody that's going out, is it possible for them to have multiple partners on one deal, multiple JV partners?
Sure.
Do you recommend that? Have you had that happen to you yet, or no? Do you just stick to one person?
Today, I have been sticking to just one JV partner, but the reason we structured like this is because we can go out and partner with whoever we want. She's never going to stop me from going and being successful somewhere else with someone else, and I would never do the same to her, right? But I think the reality of the situation is if it's not broke, don't fix it. And so it just works really well. So whenever someone brings me a deal that I'm even considering or interested in doing, I always reach out to her and I'm like, hey, this is what's going on, this is what I'm considering, do you want to be part of it? And if she says yes, I'll always find a way to bring her into it. I don't even care if it's from like my part of the deal. I'll happily find a way to include her. I will take half just so that she can be involved in it.
Got it. Okay, these days, brought to you, or are you guys still going on to, LoopNet, or you have brokers that are feeding that you? What? Because of your reputation now, how are these? How's the deal flow coming in?
We're still sourcing our deals from brokers. We don't go to LoopNet because I think that LoopNet is where deals go to die. Because once they hit LoopNet, usually they've already been passed to someone like me or 10 people like me that have all said no, right? Or it's just like a smaller operation that is not really our target. So that's why we don't really look at deals on LoopNet. I think they're great. Actually, if you're just starting out, they're really great to like build broker relationships because there are active brokers on there. So even if you don't necessarily want the deal they have listed, call them, introduce yourself, build that relationship because they will send you good deal flow after that. And especially if they get to know you and they know that you can close on the deal. But, be professional about it, set up your business properly out of the gate, and then go reach out to those brokers and build those relationships.
Are a lot of the ones that they're bringing to you, are they like off-market deals? In other words, deals, when you say that they've been passed off to other people, these opportunities that aren't being heavily marketed, they're just being circulated to people like you, to Vive Funds, VIP funds and buyers. Is that what's going on?
Yeah. Okay. So like a pocket listing, I think is what they call. I always try to think of like the single family equivalent. I think it's like a pocket listing or like a hip pocket. Is that a thing? Is that something?
I pocket listing is what most people.
Okay.
Off market.
Okay, we say off market too.
That's we refer to it over here in Cali. Okay, cool. So I think let's see. There was another thing that I wanted to talk to you about. It was the time is of the essence in securing your fund. Okay, so let's talk a little bit about that. What does that mean?
Time is of the essence in securing funds. Is that what you said?
Yeah.
In securing funds, it is because you only have a certain amount of time you have to close, and you're going to need the cash to close your deal, right? So if you have a 90-day time frame, you have to raise that capital and have that capital in your bank, not verbally committed, within that 90-day time frame. And there might be other hurdles you have to meet where you have to wire additional earnest money funds, et cetera.
Got it. Okay. So that goes back to the original comment that I made earlier, right? People should be, just like you said, in between deals, there should be raising. How much time is spent actually of your day raising money these days? And again, you're in a different position now, right? But so a lot. Okay, cool. And so you're on the phones with people are you walking them through? Are you doing Zoom meetings, lunches? Like what should someone expect if they want to become a good money raising investor?
Well, now I have a team, right? That they're like, I have an investor coordinator, for example, and his solo job is to talk to investors. Now, there's still some amount of investors that I like to interface with my investor. I actually really enjoy talking to our investors. So I still want to do that. But there is, I raise capital. Every conversation I have, I think of it as a capital raising conversation, right? Like I go to Chase Bank, Home Depot. I am raising capital in all of these places. There's nobody that I talk to in my day that is not either a current potential investor or knows a potential investor. That's all I see when I talk to people. But it's an opportunity that we're presenting to people. It's not, I'm not trying to like sell them on something. I'm just presenting another option.
And a lot of the projects that you guys are working on, I mean, I'm seeing we're talking hundreds and hundreds of units. What's the biggest project you guys have done right now?
Size, asset wise, 494 units.
494 units. Okay. So investor, are they understanding that they're going to do the buy and hold, or are you prepping them for a possible exit on this? What's that conversation? They know that, hey, look, we're purchasing this. We're going to be making a ton of improvements on this property, and then we're going to be selling it? Or do you have to tell them up front, we're just on to it? Or can that change in between? And is there any type of like legal?
No, we generally will go in. Oh, sorry, and you're breaking up a little bit. But we generally will go in and tell them that we have a 5 to 7 year life cycle, and we fully anticipate exiting after 5 to 7 years. But we communicate with our investors often. We tell them as things move and change, and so it's never like, oh, by the way, we're not doing anything for the next 10 years, and you're going to be stuck in here. No, we would be having those conversations with investors as time goes on.
Got it. So they're anticipating 5 to 7 years as their exit strategy. And then are we able to share like what their potential returns are or what they would be expecting? Or
yeah. It changes depending on where we are in the market cycle. At this point in the market cycle, I would say, 12 to 15% IRR with a 14 to 16% average annualized return over a 5-year hold is probably pretty in line with what we would put under contract. But it depends, right? Because someone might have a different strategy or be more aggressive or less aggressive. So it depends on what the sponsor is really looking at.
Got it. Okay. All right. So we covered a lot of ground here. Let's just keep it light.
Okay.
Is what you love the most about what you do?
Oh, it creates generational wealth. So my daughters they'll have enough to be able to do anything that they want to try. So they can start a business young. They can fail forward at a young age. They don't have to go like the traditional routes. They don't have to be dependent on anybody. So for me, that's really important.
Well, you're an inspiration, a real inspiration to all of us.
Thank you. I appreciate you.
I'm going to check the comment section really quick just to see what type of comments we got or any questions that we might have. And then I will.
Okay, and I have another recording starting right after this one. So
2 minutes.
Okay, let's do it.
Let's see. Just 1 second. You're getting a ton of compliments and a ton of anti.
I think you're onto something now.
I told you we were going to do it.
That's funny.
Yeah. People are just excited about what you shared and all.
I love that.
So, no specific questions, but the website for your fund is vivefunds.com.
Mm-hmm.
Okay. And if they wanted to join the Facebook community page that you have, what is that?
Yeah, it's just called Mastering Multifamily with Veena Jetti. And it's free to join, but you do have to answer the questions. Otherwise, the thing won't let you in. So just answer the questions and then you'll be in. And there's it takes time to get into the group. I don't know why. This is not my forte. Maybe Zapier will figure it out for me.
Cool. All right. I appreciate you doing this for me and for our audience. And I want to learn more from you myself. So anyway, good luck on your next call. Thank you for doing this, Veena.
Thank you. I appreciate you. You have the rest of your
Hashtag NTV.
Hashtag NTV. Bye, guys. Have a good one. Thank you for having me.